With earnings seasons starting tomorrow morning in equity markets, we're going to be looking at Bitcoin to talk about whether it's going to be going up with gold as we broke new 12-week highs today, or if we're going to be going down with stocks as we start to see a dead cat bounce in traditional equity markets. We're going to be looking at the next possible depression and see what Ray Dalio has to say alongside with some of the numbers, looking at jobless claims and comparing that to the Great Depression of 1929. And then we're going to also look at some very specific Bitcoin technical analysis. You can see here inside of this formation, we've got a potential top here forming. Just like we topped out here when Bitcoin hit 10,500, you can see a very similar channel forming here, and we are starting to see downward pressure. However, we are still right at that 50-day moving average resistance. Initially, we did tap that 50-day moving average, and that went straight down all the way to 3,900. But you can see right now, we're coming back up to retest this. So the question is, are we going to break that 50-day moving average or not? So we're going to be looking at that today. And outside of that, I do want to show you guys some other aspects of the micro analysis for Bitcoin with a head and shoulder formation here on the 4-hour chart, which as we all know is a bearish indicator. And so if you look inside of this head and shoulder, we've also got a descending triangle forming another bearish pattern. And so we're going to be looking at all of this, then looking at an interview with Ray Dalio where he actually says that we are heading into a depression worse than 1929, where we saw unemployment rates reach a peak of above 25% in 1932 to 1934. So we're going to be looking at unemployment rates and why we're seeing such a huge spike. Obviously, we all know this is all part of the global pandemic that's going on worldwide. And I emphasize with all of you guys going through that. And I hope you guys are all very safe with your families and friends. And of course, following social distancing protocols. But once again, it is causing economic ramifications that may be permanent, right? A temporary issue causing permanent damage, and that's just not a surprise. And then we've got some interesting charts to look at outside of the unemployment numbers. If you look here, we're going to be looking at the S&P 500 and Bitcoin correlation, because what we're seeing right now in the equity markets are a possible dead cat bounce. And I'm going to be comparing the Great Depression to what we're seeing right now in regards to this over 25% increase from the recent bottom in equity markets, and whether or not we have found the bottom or we're going to continue downwards. And then, of course, like always, we'll look at the transactions per day, the hash rate seeing some new higher highs. But of course, what's very interesting is the fear and greed index coming back down to around 11, where we were right around 25 last week. So you can see we were at 20. All of this still extreme fear in the market. But as you all know, we like to buy into the fear. So we'll talk about my targets for Bitcoin. And then, of course, very interesting article to me. Bitcoin exchange deposits hits low that it hasn't hit since August 2nd of 2017. And so I pulled up this chart for you guys, and I'm also going to be charting how Bitcoin looked here in August 2nd of 2017 and how we initially saw the lowest amount of deposits and exchanges that then caused the breakout that eventually took us to 20,000. So very interesting article and chart here that I'm going to be going into for you guys. And then we'll look at this chart here showing market bottom or more blood to come. And this is actually tracking the unrealized profit and loss for Bitcoin. And I'm going to be talking about this chart here in just a second. And then, of course, we'll look at future indices to see how we're most likely going to open tomorrow when it comes to traditional markets, since we're in such a correlation with equity markets right now. So I'm going to dive into this Bitcoin analysis. We have a ton to cover, but I guarantee you guys, you're going to enjoy all of this. Make sure to subscribe and like this video if you guys appreciate this content. But first and foremost, we want to look at the macro right now. You can see we've got this bullish falling wedge forming here, and then we've also got this bullish symmetrical triangle forming on the macro. And so we're still very bullish about Bitcoin on the long term, but understand that we've already seen a rejection here at that 50-day moving average, and that's initially where we rejected back here in March 6th of 2020, where it took us down to 3,900. You can see we retested that 50-day moving average right here before really seeing that dump down, which actually even broke this major support level from both macro charts. But then, of course, the bulls quickly came in. You can see a lot of buy volume came in to catch Bitcoin. And I'm going to talk about why I don't believe Bitcoin will go below this 200-week moving average, which is in this dotted green horizontal line. We're sitting right around that $5,650 to $5,700 level for that 200-week moving average. And I can actually raise this up because we just rose up to around that 5670 today for that 200-week moving average. But what's very interesting is it actually shows a correlation, and it goes right along this support level, this descending support level that actually acted as the bottom for the previous rally that took us up to 10,500. You can see that was the bottom here. So there's a lot of confluence here where we've got the 200-week moving average and we've got a support level. And so I am still sticking with that 200-week moving average as the prime entry for Bitcoin because I'm still very bullish in the macro, but understand that in the shorter time frames that there are more bearish indicators that we are seeing here. And I'll talk about exactly what I'm talking about. So I actually drew this up here. What I found very interesting was we're actually starting to top out here the same way that we topped out when Bitcoin was around that $10,500 level. You can see we initially started to form this descending resistance level in this light blue here. And you can see that started recently here, right around that $7,500 level on April 6th of 2020. And then on February 12th of 2020, we topped out around 10,500 and formed these initial tops here that touched the top of this resistance level and then eventually crashed down and then went back up to test that, but of course still within that descending resistance. And you can see we already kind of formed that here, and then we came back down into this descending support level, and you can see that is exactly what happened here. And so what I'm expecting right now is we may come up and touch that 7050 area, so go right back above 7,050. And if you guys are part of our Discord group, you know that we posted a long, one of our analysts posted a long today, I think it was a few minutes ago, and I totally agree with that because there's a high possibility that we can come up into this channel just like we did here. But the point of all of this is to show you that this was a top out pattern. And so it almost looks like we're topping out here the same way that we topped out here. And of course, once we come back up and touch this one more time, that's really where we're going to get that ultimatum. And so what I'm watching at this point is when we come back up through this channel and we touch this descending resistance level, that's going to be right around that 7,050 level. We can just assume that it's going to be anything below 7,200. If we're able to break this descending resistance level, then I think that things could be extremely bullish because that would also align with where the 50-day moving average is currently sitting here. And then that would actually break us above that 50-day moving average, which would be extremely bullish in the short term for me. And then that would actually take Bitcoin most likely up to that $8,000 level towards that 100 and 200-day moving average. And so realize that so far we're topping out the same way that we topped out when Bitcoin was at this $10,500 level, but the real level to watch here is that $7,100 to $7,200 level to see, are we able to push above that? And that's going to take us above that 50-day moving average where it's actually sitting right at that descending resistance level. So when we look at the micro and we go more into a smaller time frame here on the 4-hour instead of the daily, we've got a head and shoulder forming here. And interestingly enough, the top of this right shoulder will actually take us to the top of that channel right around that 7070 area, which is also that 50-day moving average, where you can see I've got that labeled here for you guys. 50-day moving average will move pretty quick on a daily basis, and so this is just going to continue to most likely lower as we progress day by day. But the point is there's a head and shoulder pattern forming, and so for us to once again break above this descending resistance level would also break this bearish head and shoulder pattern that's forming, which would also then break this bearish descending triangle pattern that's forming. But currently these are the patterns and we can't deny that. And so the point is things are a little bit bearish right now. I see we've got Dipple, Sunny, Master Benny, Lymphatic, William Lee, and Rumbero on our live stream. Quinn Berry says, do you think crypto will disconnect from the stock market eventually? Great question. So that's exactly what we're going to be talking about here, because understand, at the end of the day, we have to realize that Bitcoin is extremely correlated to the stock market right now. And the point of Bitcoin is to be a storage of value, but we've talked about this before. It's not just a storage of value, it's also a volatile asset since it's still in its speculative phase. And so realize that it's going to see sell off when we see major markets sell off, because people are going to rush to liquidity, as we saw earlier in this month where we had this liquidity crisis and we saw a sell off among all major assets, commodities, precious metals all suffered during this sell off. Of course, gold right now outperforming the majority of these assets. But once again, Bitcoin is the digital version of gold, and it actually solves a lot of the issues that we're seeing right now with gold not having physical supply to meet the physical demand, as well as the future prices being so far inflated from the spot price. And so we're seeing all of these issues that Bitcoin could solve. And of course, the physical gold actually being physical, and it is a potential of a contaminated surface, right? Even that, right? Even with traditional currencies being, a potentially contaminated, surface, just having the dollar bill, you see people literally cleaning their dollar bills out right now, and that's not that big of a issue, I think. But the point is, realize that, in my opinion, when Bitcoin is going to finally move, because it hasn't moved in quite a while. What we saw was when Bitcoin eventually found its bottom right here around March 12th, the S&P 500 didn't see its bottom until March 24th or 26th. I forgot the exact date, but the S&P 500 actually decoupled from Bitcoin. Bitcoin decoupled with the S&P 500 really is what happened, because the S&P 500 is a multi-trillion dollar market, while Bitcoin's right at around 100 billion. So realize that Bitcoin can only really follow the S&P 500. It's not the S&P 500 following Bitcoin, but realize that at that time it kind of was following Bitcoin in a way. But Bitcoin, it decoupled with the S&P 500 once we became extremely oversold. And when you look at volume, you can see exactly why. It's because we broke these major levels of structure. And if you look at the logarithmic long-term chart that I recently posted, we even broke that support. And so you can see with the peak volume of buyers here, it completely outpaced the amount of sellers. And so I believe that Bitcoin is going to switch back and forth between gold and equity markets as a correlative asset. But in the long term, I think it's going to follow gold. And I think it's like that just because of the deflationary properties that are naturally built into Bitcoin, whereas the Feds are continuously pumping liquidity into the markets. And it's funny because if you look at the stimulus bill, the Feds are actually bailing themselves out. There's actually a part of the stimulus bill that says the Feds are getting over 400 billion. And so I think that's quite interesting, the fact that the Feds are pretty much in need of money, just like all of these other companies like Boeing, because in the stimulus bill, there's a part of it that says the Feds get 400 plus billion dollars. And it's, to me, that's a little bit worrisome and it's funny. But as we all already know, that's a big issue right now with the banks printing money. Everybody has been talking about that. And so I'm not going to get too far into that. But the point is, I believe that as Bitcoin comes down and retests this 200-day moving average and the support level here, and we get that perfect entry, I don't think we'll come back down to this level. We obviously know there's a lot of demand here, a lot of accumulation, and I really believe what's going to happen is we are going to consolidate around this region, because when Bitcoin bottoms out, it typically likes to consolidate, and that's a pattern it's followed for quite some time. And we'll actually see exactly what I'm talking about here when we look at this chart that I'll show you in just a second. But I want you guys to watch this short clip here by Ray Dalio. He's the founder of Bridgewater Associates, the largest private hedge fund in the world, managing over $130 billion in assets. And he's actually the one that predicted the 2008 crisis, lost less than 1%, while most hedge funds lost 60% up to on average. And so, this time around, he was also caught off guard by this recent breakdown. But it's interesting what he has to say, because he's never been in the news as a far left or far right. He's always been a realist, and it's interesting for him to actually say that we're heading into a Great Depression, and to hear how worried he is. You can even see his face throughout the video. It almost looks like he's about to blow out of his webcam. Like he's like shaking. Like he's so worried about our economy. I think it's interesting because I'm going to be comparing a chart of the Great Depression versus how the stock market looks today. Because regardless of the fact, we know that Bitcoin is correlating with stock markets right now, and so that's where we want to watch. And so I'm going to talk about why I'm expecting a lot more downside in the stock market, and why I believe that this bounce that we're seeing right now, that's over 25%, is just a dead cat bounce, and that we are going to see a correction just like we saw during the Great Depression. And we're going to talk about how that pattern played out. But first and foremost, I want you guys to see this video because I think it's a very valuable clip here. So it's going to be just a minute here, even less than a minute. But listen to what Ray Dalio has to say when he's asked, are we in a Great Depression?
So what do you mean by a depression? Okay. Something like happened in the 1930s. So just to repeat, 1929 to 1932, there was a fall in the economy and a very double-digit unemployment rates and a magnitude of fall in the economy like about 10%. Do I think we're in that? Yes. How was that dealt with? 1933. What they did is they printed a lot of money. And the government came out with the same type of programs that we're having now. Yes, okay, same thing. Zero interest rates hit zero, same thing. Okay, same dynamics. And then there is that money causes an expansion from that point. How long does it take for the stock market to exceed its highs? Or how long does it take for the economy to exceed its former highs? A long time. Okay, do I think that's what we're in? Yes, that's what we're in. We've seen that happen repeatedly in history. So many times. It's just the most recent one. And there's a structure to that. So yes, this is not a recession. This is a breakdown, an operation that I'm just describing in terms of how it's dealt with, the production of money and credit and all of that. That's what we're in.
And so you've talked about there's sort of four levers.
Realize what's happening here is Ray Dalio is pretty much saying in this video that we are heading into a depression even worse than what we saw in 1929 that lasted until 1934, where at the peak we saw over 25% unemployment rate. When you look at the numbers of unemployment that we've recently seen here in our economy, you can see over the last 3 weeks, we've pretty much seen 17 million citizens apply for unemployment. And we saw 17 million jobless claims, and that's minus independent contractors, Uber drivers, and gig workers. And so realize that it's not just these unemployment numbers, but on top of that, businesses are locked down. Businesses are not generating the type of revenue that they're supposed to be generating in Q1 and possibly going to leak into Q2. And so we're heading into these permanent ramifications that are putting us into this very tight stronghold that we may not just get out of as easily as we've seen ourselves get out of other recessions in the past, such as 2008. And so if you read Principles by Ray Dalio, he talks about the long-term debt cycles and the short-term debt cycles. The long-term debt cycles are 50 to 60 years apart, up to 75 years apart, while the short-term debt cycles, where those are what people are more familiar with, are 10 to 12 years. But the long-term debt cycles are the ones that are a lot more abrasive to our economy. And so, interestingly enough, because I saw that video, I decided to number one, show you guys this chart here about how closely correlated the Bitcoin price is to S&P 500 right now. And so the equity markets actually matter. And so what we want to do is look at what happened in the Great Depression, which is shown here on the right, versus what's happening right now to our current market. And so we're going to be using the Dow Jones Industrial as a chart to kind of represent what's happening right now. So you can see right now in 2020, we saw this initial rally up, and we saw this period from March 2018 all the way up to around September of 2019, where we've kind of consolidated before coming out and topping out and then finally seeing this major crash down. Interestingly enough, in 1929, during the Great Depression, and when that started, we did the same exact thing. We saw this rally up, a consolidation, a top out, and then the big push down, right? And very similarly to what we're seeing right now, we saw a wave up, a dead cat bounce, a corrective bounce of about 52%. Understand that during the whole Great Depression, we saw a 90% decline in the stock market. I don't believe we'll see a 90% decline during this depression, but I do think 50 to 60, even 70% is highly probable. But understand that look how this happened. So we've already seen a 31% correction to the upside since this major drop. And it was very similar to what happened here during the Great Depression. Now, let's see how the Great Depression played itself out as unemployment numbers. Interestingly enough, in 1929, we're at record lows of 3.1%. And not a lot of people know this or talk about this, but people say that unemployment during the Great Depression was over 25%, but that was in 1932 to 1934. In 1930, we were only at 8%. A year into the Great Depression, we were only at 8%. Another year later, we were only at 15%. Realize that with the jobless claims that were already released of over 17 million, that already puts us over 10% unemployment. And if you saw the recent unemployment numbers, obviously they're a lagged indicator. We went from record lows of around 3.2%, very similar to the Great Depression, to around over 5%. And that's going to continuously increase. Yesterday, Disney announced over 40,000 jobs are being furloughed just due to the parks being closed, right? So we're going to see more and more companies that are holding on to their employees right now, hoping that things get better, make the decision to say, all right, well, we can't do this anymore. We have to let go of these employees. We have to cut expenses. We're seeing restaurant owners, we're seeing business owners, small business owners from across the world shutting down because of what's happening. So a $1,200 check, even a $10,000 forgivable loan, or a $10 million loan is not going to be enough to save some of these companies. Boeing on the brink of bankruptcy. Unemployment rates hitting over 10% in 4 weeks, or we can even say 6 weeks if we want to come to the start of this. Even worse than the Great Depression, where it took us 2 years to hit over 10%. This time it happened in about 6 weeks. And so I believe we'll see that even go higher over the next few weeks, just because of the fact that some companies are hanging on to their employees. They're applying for payroll protection, right? They're doing these things, trying their best to hold on, but at the end of the day, they're going to have to let go. And so how did the Great Depression play out? Well, look what happened. So we saw this corrective wave up, over 52% gains. You could have said, oh, well, perfect. We were going to see a V-shaped correction here. Well, no. Interestingly enough, it went right up to where the previous consolidation occurred. You can see this rally up is coming right to the same exact area this rally came up to. And what I mean by that is it came up, you see where we've got this consolidation? That's where we topped out here, where we had that consolidation, we topped out here. And then guess what? The direction was clear. So you can't sit here and tell me that this is just going to go back up like this and we're going to just continue back up like nothing happened. Like we didn't just go through a global pandemic. You're not going to sit here and tell me that. You're not going to sit here and tell me we're going to see a V-shaped correction when the Feds had to call 2 emergency meetings to cut interest rate. Donald Trump, our president, is on a live broadcast every single day right now, which doesn't happen unless you're in a all-out pandemic or war, and unemployment has skyrocketed to numbers that has never been recorded in the history of our country. And so you can't sit here and tell me we're going to just V-shape correct up. No, I think this is what's going to most likely happen. We're going to head into a bear market. Look what happened during the Great Depression. That was just the start. That was just the start. That was just the start. Took us all the way down before we came back up to recover. You can see it was a very hard recovery. And it took a lot of time. These are still lower levels than where we topped out at, right? Do I believe we'll see this the way we saw it in the Great Depression? No. But do I believe it will continue down, possibly see new lows in the traditional markets? Yes. If that happens, guess what? Bitcoin has the chance to see lower levels. And remember what happened when Bitcoin really got oversold? It decoupled from the S&P 500. So here's the assumption. We continue lower for stock markets. Bitcoin continues to come down, but doesn't go as low as stock markets, just like it did on March 12th, where it said, you know what? SP 500, you keep going, brother. I'm not going any lower. You saw it decouple itself, right? I think it's gonna happen the same exact way. We're gonna come down to this 200-week moving average right here, and then from there we're going to test this support level inside of this bullish falling wedge. Worst case scenario, we come back down and test the bullish symmetrical triangle support of around 4650 before, if the stock market continues to go lower, Bitcoin's going to say, all right, cool, keep going. We're going to decouple. And then it decouples itself, and then guess what? It goes back to gold. Gold continues up. Gold is looking very bullish right now, by the way. And then guess what? Bitcoin halving or halving, whatever you guys want to call it, comes. Supply gets cut in half. Fundamentals are in. As we all know, people will realize what the Bitcoin halving or halving is, 2, 3, 4 months after it happens. And guess what? Bitcoin comes up, breaks through these macro bullish patterns, and we continue to see upside, possibly break new highs. I think that's a very probable fact here. I'm not going to sit here and tell you all the great things about Bitcoin, right? If you guys love Bitcoin and the fundamentals of it, like this video or or say something in the chat. I'm sure we all like Bitcoin, right? Look, the likes on the video just went from like 20 to over 30 just with that snap of a finger. So we all know we like Bitcoin, right? So we don't need to vote on that. But what we need to vote on is it going to correlate with stocks or is it going to correlate with gold? That's my opinion. It's going to initially correlate with stocks. Stocks will see downside. Bitcoin's going to pull another one where it says, okay, keep going down. We're going to decouple. And then it continues up. Because remember, Bitcoin bottomed out March 12th. The stock market didn't bottom out until March 24th to the 26th. And so it decoupled already. It proved itself there. But then guess what? It went right back to its correlative fundamentals. So this isn't where things end. Watch this. Stay tuned if you guys are finding any of this interesting. If you guys like this type of analysis and research, I'm kind of switching things up a little bit. Make sure to like the video, subscribe to our channel, turn on the post notifications as well, because it's always random when I go live, but it's always Monday, Wednesday, Friday. But realize this: confirmed transactions per day. It was consistently making higher highs, started to make a higher low. So you can assume that it's going to start a downtrend unless we see a higher high form above this 312,000 transaction per day level, right? So this is one of the most important fundamental aspects of Bitcoin, in my opinion, because it's what shows use case, right? It's what is active in the blockchain for Bitcoin. You can see possibly starting to trend down. We don't know yet, but hash rate looking good. We're coming back up. Interestingly enough, with this hash rate, fear and greed index coming back down. This is the time we want to buy. I want to see this at 8 or 7 or even 6 in the next week or so as stocks top out, because I still believe we're going to top out. Like I just mentioned, why would we keep going? What's the point of that? I'd love to hear you guys' opinion on the live stream. See if we've got Peter, Joshua, Stephen, Ward, JK, Johnny on the live stream. Good to have you guys. Nicholas, good to have you, brother. So realize that we talked about that chart here where it shows market bottom or more blood to come. I want to go into this for you guys. This is one of the most interesting charts I found, and I think this is what you guys are going to find most interesting about all of this. So this is showing us here the unrealized profit and loss for Bitcoin holders, and the way it calculates that is by taking the difference between the current price and the price at the time of the Bitcoin that was last moved in a wallet, right? So it basically tracks what's the unrealized profit and loss, and you can see every time that we've seen this come into this red zone, it even says it here, it bounced out of the red zone quickly. So you can see it recently came into that red zone here on the right. This red zone has historically signaled a bottom in the market and a shift towards more positive sentiment. In the past, this is very important, NUPL has stayed in the red zone for several months before retracing. Will this time be any different? So what it means by this is when Bitcoin bottoms out, it consolidates. It stays in the range for some time before seeing new highs. It doesn't just bottom out and go back up. Now, it does mention a possible reason that it could have had bottomed out here and not come back down. And it says here, because of the halving or the halving, this is the first time that we've seen it in red with a halving or halving coming up. So it could be possible that it's already bottomed out, and this was just, as it says here, this was just a small bump in the road on the way to new highs. But I don't believe that's the case. I believe we will consolidate, as we've already done that every single time this chart has shown red. And the reason I say that is because of what I just talked about. I think Bitcoin is in a big bear flag right now, and it needs to come down and retest that 200-week moving average. And so when you look at what's happening here, interestingly enough, if we pull up this chart, this is August 2nd, 2017, where Bitcoin saw levels of exchange deposits at historic lows. And we recently retested that low for the first time since August 2nd of 2017. Now, interestingly enough, what happened to Bitcoin when that happened was Bitcoin soared through the roof. And it's funny because we almost saw a similar pattern form here where we bottomed out, saw a spike up, and then came up. You can see same thing here. We have this huge pattern here. We come up, we bottom out, we come back up, and then we continue upwards, right? So I think over the next few days, what I'm trying to show you is if we break above this 50-day moving average, things can get very bullish very fast because there's proof here that that could be a potential. But at the end of the day, in the past, we've consolidated at these bottom levels or when Bitcoin finds its bottom for some period of time. And so I think that there's a very 50-50 percent chance here that either or happens. And what we need to watch is what I talked about with the technical analysis earlier. It's that 50-day moving average resistance, that descending resistance level breaking, which is right around that $7,100 to $7,200 level for us to confirm that we'll head towards 8,000, and that could be it. We just soar up through there. Or if we see a retracement in stock markets, which need to happen soon, they need to happen in the next day or two, or maybe by the end of the week at most, then we'll see Bitcoin finally come down into a buy range where bulls will come and bring it back up, right? So very interesting chart in my opinion. And then just to end things off, I don't want to get too long before I answer some questions from our live audience, but Bitcoin Cash recently had its halving or its halving. I know you guys make fun of me on that word, but interestingly enough, we saw a capitation of miners. Not good, right? If this happens to Bitcoin, Bitcoin will plummet in price. So interesting to see that happen. Is that going to happen for Bitcoin? I don't know. Bitcoin Cash was kind of the free money that you got if you had Bitcoin at the time, right? For those of you that weren't in the sphere back then, I was actually on YouTube back then. We talked about the Bitcoin Cash or the fork when Bitcoin Cash came and Roger Ver decided to create Bitcoin Cash. Basically, if you have Bitcoin and it forks into a new blockchain, you get whatever the fork is. You have to be holding the physical Bitcoin in a wallet at that time. So everybody that had Bitcoin, 2 years ago, or I don't know the exact date, when Bitcoin Cash forked, everyone got Bitcoin Cash, and it was like free money for whoever was holding Bitcoin. Well, that recently had its own halving or halving, and it actually crashed because it became unprofitable. And so, interestingly enough, Bitcoin Cash, in my opinion, is not going to be here a long time from now. So it's like every other altcoin. I don't have too much belief in it. And so it could go either way with altcoins, but with Bitcoin, it's different in my opinion. Interestingly enough, though, Bitcoin's hash rate actually rose as that happened. So it's like the miners went from Bitcoin Cash and said, all right, we're going to, we're going to go to Bitcoin now. So I think that was interesting. And so to end the video, you can see future indices retesting these major resistance levels right now. That 2800 for the SP 500 is a major resistance level. If we continue up from here, Bitcoin could really test that 50-day moving average and break up from there. But I think anything that happens in the stock market, whether we do break up right now from the highs, it's going to be a bull trap and it's going to continue lower. I don't see the economy coming back to the levels that they are meant to go at. Just like Ray Dalio said, it's going to take some time. And so we looked at this chart here comparing the Great Depression to what's happening right now, and so I just don't expect this V-shaped recovery to happen. I'm expecting this rally to be short-lived and for us to at least come down to retest these lows, just as we did here during the Great Depression. Of course, this turned out a lot worse, but like Ray Dalio says, he's spent hundreds and hundreds of millions of dollars on research, and that's what he does for his hedge fund. And so I can't deny his fact. So I'd love to hear what you guys have to say, and we will go ahead and take some questions from the live audience. But remember, things are 50-50 right now, and I'm going to kind of quickly go over our Bitcoin technical analysis for you guys that just tuned in. And for those of you guys that have been watching, this is important as a refresher. So once again, we've rejected that 50-day moving average here twice already. But now, for the first time, we're coming back to retest that. So currently, Bitcoin is bullish in the micro. Of course, when it initially tested that, it dropped right down below 3,900 at that time, or actually right below 4,000, around 3,950, and then it continued up. Right now, we saw the push down, but it's coming back up to retest. Interestingly enough, it's a pattern that topped out Bitcoin here at 10,500. We're seeing the exact same pattern here. If we pull up this 2-hour chart, you can see it perfectly where we've got this descending resistance level in this light blue. We've got this area where we tested that resistance level multiple times, exactly what just happened right now. And then you can see we came back down. We formed this new descending support level, came back up, tested that descending resistance, happened here already. And then we formed a parallel channel that ended up being the bear flag that took us all the way back down to that $3,900 level. And that's how we topped out here in February of 2020. And it's looking like we're topping out here the same exact way. Interestingly enough, this resistance level is actually exactly where that 50-day moving average is. And so we need to break above this in order for us to assume 8,000 is in play. If we break above, I think things can be very bullish. That means that traditional markets are most likely going to have to break, and then Bitcoin will have that chance of seeing 8,000. And then from there, we don't know. Will it decouple and then equity markets come down? We don't know how that's going to work, but we do know in 2008, gold didn't completely go up while equity markets were going down. It was a tough battle for gold as equity markets came down, but then eventually, as equity markets approached its bottom, gold soared up. So we talked about that chart about 2 weeks ago in our video. But yes, Bitcoin is topping out very similarly to how it topped out here at 10,500. And then on the micro time frames, you can see we've got a head and shoulder pattern forming here. My target is that 200-week moving average because there's a lot of confluence with this descending support level that was the bottom of the December 2019 bottom of that $6,400 level that took us to 10,500. And so my target is going to be that 200-week moving average for the breakdown. And then, of course, we're also inside of this descending triangle. So two bearish patterns that could be broken if we just break that resistance, which is the 50-day moving average, right around 7,100. If we break, things could go to 8,000, become bullish. If we don't, I expect the downside, and I expect us to come down to that 200-week moving average. So expect a ton of volatility in equity markets and even in currency markets over the next 3 weeks. Tuesday morning, tomorrow, earnings season starts. So we're going to start seeing companies throughout the next 3 weeks. Earnings. That's going to cause a lot of volatility. And once again, for us at least as traders, it's going to cause a lot of opportunities. And I implore you guys that are at home right now, quarantined, this is the time to learn how to trade. This is the time to gain a new skill that nobody, no virus or no boss can take away from you. And so that's why we've seen profits like we've never seen before. Unfortunately for currency markets, it's been quite a rough last week or so. I do have a meeting about that tomorrow morning with my team. So for those of you on our premium Discord group getting our ETF, stock, crypto, and BitMEX signals and Forex signals, Forex has been a little bit on and off. We were about a 5 out of 10 ratio this last week and a half, and so that's unacceptable. We're usually at 9 out of 10. But it's really because all the quantitative easing, the central banks printing money, the Bank of Japan, the European Central Bank, the People's Bank of China, and obviously the Feds, all printing money right now, other than the People's Bank of China, but trust me, they'll follow. But all of these major central banks printing money, and inflation is just going through the roof for a lot of these currencies. And so markets have been super volatile. And so I don't know if it's our end that needs to be improved, or it's just we need to take a step back and say, all right, well, for the next 3 weeks, things are going to be high risk until that VIX corrects itself and comes back down, that volatility index. So, who knows? We'll have a meeting. I'm going to do some more research on that with my team tomorrow morning. But yeah, thank you guys so much for tuning in. Mike Roberto on Twitter says, what are his facts? Facts of what? Paul Gray says, if it followed the typical halving pattern where there's a decent pump because people don't understand there's hype about 2 times prices and then a big dump when miners unload. I'm expecting that. Akasi says, I remember Naeem being energetic before not long ago. What happened? I missed the old Naeem. I was watching my old content. I'm like, man, our content now is so much better. If you guys agree with that, say I in the chat or like the video. Likes do help for the long term. JK says, thanks for the stream, brother. The quality content. Absolutely, brother. Peter says, it's my day 14 of being quarantined in my RV. I'm free tomorrow. That's funny. Cole says, did he just give up a controlling interest in a bank last week? WB isn't still holding onto his cash, is he? Warren Buffett? Well, Warren Buffett's a very interesting man. People said he sold Delta stock because he expects it to go to zero, but no, that's not the case. He just wanted to go below that 10% equity so that he doesn't have to follow certain SEC guidelines about reporting all of his trades and stuff. And so there's a very strategic path that Warren Buffett takes with his investments. Rob D says I, Cameron says I, Bent says I love it. Well, thank you guys. Carl says I think your streams are a lot way better now. I agree. What do you think of XMR, Johan Lim? Stay away from altcoins long term. At the end of the day, there's no altcoin yet that has proven mass use case. Ethereum was the only one in 2017 and 18 with ICOs and raising funds. But now when you look at the amount of money raised in ICOs, it's almost a joke compared to what was being raised at that time. And then outside of that, CryptoKitties was the largest use case. No point of that at the end of the day, in my opinion, right? So be very careful there. Carl says the bulls are coming. The bulls are coming back then. Your content matured well. Thank you. You got to keep evolving, huh? So what do you think about the Elliott wave pattern? Well, if we're going to talk Elliott waves here, we can assume here 1, 2, 3, 4. I mean, we can probably draw 5 waves out twice on this alone. Probably 5 waves ABC correction. I mean, I don't like doing Elliott waves too much because there's so much subjectivity involved with that. But I try to stay away from that. But some people are pretty good at that, I guess. What's the ideal range to buy BTC? I'm looking at, for those of you in our premium group, I did post a long-term crypto, Bitcoin and Ethereum signal with multiple entries. But just to give you my personal take on it, it's going to be near that 200-week moving average or any one of these support levels. So I'm looking at that 46.50 all the way up to that 58.50 area. Even there's a parallel bear flag support actually right around that 62.50. So all those are good entries. But that 200-week moving average in the past has proven to be a perfect entry for Bitcoin. If you look at a chart here and you look at how that 200-week moving average played part, you can actually see here that 200-week moving average showed to be the perfect entry when we broke down from this major. Oh, check this chart out. Interestingly enough, I've got all these very important macro daily support and resistance levels drawn out, and I'm going to show you something really interesting. But you can see here that 200-week moving average in green being that perfect entry here, that also being the perfect entry for this recent rally up. So I like the 200-week moving average. But interestingly enough, you can see we actually wicked down to the top of this support range here. This was actually this support level here. So I actually drew this out just to watch while Bitcoin was consolidating here to trade it really well on margin. We had some phenomenal. I mean, our BitMEX trades, we haven't hit a loss in like what 20 trades now. So our BitMEX signals have been the best signals that we've been posting. But at the end of the day, when there's a long streak of good, we end up having a long streak, not a long, I mean, typically a shorter streak of bad. So be careful, keep your risk management if you've got profits here in play. But anyways, you can see we wicked right into that zone, came right back up. I wouldn't be surprised for us to eventually come back down, start testing these zones. And then, of course, we've got that 200-week moving average. I can raise that up to right around this area right here. So I think we'll find some confluence with this descending support level. And so I don't expect that to happen just yet. It could go up, could go down. I really believe, as I've talked about, we might see a consolidation here. I think we'll eventually bottom out here. And then, as we've always done when Bitcoin bottoms out, we stay before we go up, right? So we consolidate before we go up. We see any sort of bottom pattern. You can see it happened here too. So that's typically how Bitcoin likes to bottom out. So hopefully that answers your question there. What's your opinion on Chainlink? I think it's just another coin, another altcoin with a lot of hype. I'm not going to go too much into it. Great coin to trade. It's been seeing a lot of volume. It's been seeing a lot of price gains, outperforming a lot of coins, but it is what it is. Bent says, feel pretty bearish for the short term. Well, understand that we're at pretty extreme fear when it comes to emotional sentiment there. So you're not the only one. Thank you guys so much for tuning in. Appreciate you guys. I'll see all of you guys on our Discord. Remember, it's discord.gg/profits. And I will be with you guys on Wednesday. So thanks for tuning in. Hope you guys enjoyed this live stream.